Good afternoon, everyone. First and foremost, thank you all so much for joining us for this webinar session today. Now, a number of you will have been with us when we did our January Business Outlook presentation and webinar back in January this year. And as many of you know, we like to do a mid-year insight report as well. But like the sector, and the nursery sector has to adapt and change nimbly to changing conditions and challenges, we too have had to make some changes. So we had planned to be publishing our mid-year insight report on the 4th of July, but clearly we had a general election being called. And so while we've published our mid-year insight report today, and while we're delighted to bring this webinar to you today, we're going to just very briefly be touching on some of our mid-year updates, and we're going to focus today's session primarily on the changing government. We are going to be talking about what a new Labour government means for the earlier sector. And then we're also going to be talking about what the fiscal outlook might look like under a new Labour government. So we're delighted that you've joined us for this session. And I'd like to start by just introducing our panel and our presenters to you this afternoon. So obviously myself, I'm Courteney Donaldson. I'm Managing Director and Head of Childcare and Education at Christie & Co. I'm going to pass over to my colleague Nick to introduce himself.
Thanks, Courtney. Good afternoon, everybody. My name is Nick Brown. I've head up the Childcare and Education team across the UK. Been in the sector sort of 25 years now, and been lucky enough to be involved in a vast majority of the main transactions across the country. So looking forward to giving a point of view this afternoon.
Thank you, Nick. And we're delighted to be joined by Purnima. Purnima?
Thank you, Courtney. Good afternoon, everybody. I'm Purnima Tanuku, Chief Executive of National Day Nurseries Association, and hopefully I will give you some hot off the press news today later on.
Fabulous. Thank you, Purnima. And we'd like to be joined by Ben from Ballards as well.
Thanks, Courtney. Hi, everyone. I'm a partner at Ballards LLP. We're a firm of accountants based in the Midlands, and personally, I look after a number of childcare businesses, including sort of a number of acquisitive multi-site groups. So look forward to joining the panel.
Lovely, that's great. So thank you all for joining us this afternoon. So we're going to start just briefly with an update from myself and Nick, just looking at what we've seen year to date in the first 6 months of this year, from January through to June, and some really high level information. As I say, we publish our reports. We've published our report today, and at the end of this presentation, there'll be a QR code from which you can scan and read the report in further detail. But in terms of just a brief summary, so at the start of the year, we were cautiously optimistic, and we did predict further market consolidation, but we've certainly seen a really busy start to 2024. It was interestingly, I invited questions from our audience ahead of this webinar, and a question came in just a few moments ago asking about the market and is it still buoyant? And it certainly is, and we'll be expanding on that question as we go through to our Q&A session at the end of this webinar. I think one of the interesting things from our perspective has been that at the start of the year, January through to March, we didn't see the same volume of nurseries coming to the market that we normally would, because lots of owners, they were just waiting to see what April would bring. What would the Conservative government's announcement regarding the expansion of early years entitlements bring in April? So that did just slightly slow down that first quarter of activity. But we've had a really positive year since then, certainly more opportunities coming to the market. We've also seen, I would say, at the half-year point, this year compared to last year, transaction volumes for nurseries are down by 20%. So we've transacted 80% compared to where we were last year. But interestingly, the nursery sector market activity, that is at slight odds to what we're seeing wider across the whole of Christie & Co. So year to date, across Christie & Co, our transaction volume is up significantly on the half-year points that we were at this time last year. We've sold, it was 500 businesses at the end of June. We're now up to just over 550 businesses sold already this year. So I think that's a really positive point. And something which Nick will touch on later, while the market's buoyant, while there's lots of activity, and while there's still continued demand from buyers, there's no doubt that transactions are taking longer. And you can see there, circa 12% longer year to date than we saw in sort of 2003. And a lot of that is because buyers have become increasingly diligent. Slightly post the election outcome last Thursday, but I guess in the lead up to it, we have started to see a further increase in owners talking to us about their exit plans. So we are expecting quite a busy second half of the year. I think we've seen a continual trend in the average size of nurseries sold year to date. So year to date, the average size of each setting sold was 78 places. That's a 13% increase compared to 69 place averages that we saw last year. And equally, it's really important to highlight that nurseries very much remain a green light sector for banks and investors. Increasingly, this year, more so than last year, I've had more and more conversations with banks that are incredibly keen to support nursery owners in the sector, to support them with their new development plans, their organic growth plans, to help them with capital to increase provision if they're seeing demand for additional places for children from 9 months, as per from September, as was expected, and for acquisitions as well. So very, very positive. From our perspective, as a team here at Christie & Co, we have seen a 6% in the number of nurseries that we are visiting or have visited year to date. We've seen a 23% increase in the number of offers received for the nurseries that we are selling, which really demonstrates the breadth pool of buyers that we have for a really wide range of nurseries that we're selling. And it just shows the enthusiasm of those buyers via that significant increase in the number of offers we're receiving. Since the end of Q1, we've seen a 16% increase in the volume of nurseries for sale. And at the half year point, we have seen 90% of the asking prices achieved for the day nurseries that we're selling. So I think all incredibly positive. One of the trends in the first half of this year has been the real growth of demand from buyers to buy leasehold nurseries ahead of freehold nurseries. And we've seen a very notable sort of 78% of our sales year to date have been leases versus 67% for the same period last year and 51% for the period for the year before in 2022. This has been a continued shift in trend. And if I look back up so 10 years, I would say 70% of our sales were freehold. So there's been a massive shift. And this is because vendors are increasingly, if a vendor or a nursery owner, if they own their freehold of their nursery business, they are increasingly choosing to retain their freehold interest when they sell. They're creating a new lease for an ingoing purchaser or operator, and that provides that former business owner, that nursery owner, with an annual income stream. The trend has also shifted towards leases because from a buyer's perspective, if they are acquiring leasehold nurseries, arguably they can acquire more nurseries because the cost of capital has increased. And therefore, with leasehold nurseries being at a different pricing point to freeholds, they can reserve their acquisition funds to buy more nurseries as opposed to whether they were just buying freeholds in isolation. But that said, there remains good interest from buyers for freeholds because for an operator of a freehold nursery and for a buyer, owning that freehold gives them absolute control of their assets, of their operations. They haven't got to worry about a lease coming to an end or a rent review, and they're in control. So they've got more options and more control. And they can also leverage their freehold asset for secured lending purposes if they want to grow and further expand or raise capital for other projects. So that's a notable shift. Equally, I think we've seen a real shift this year in terms of the types of buyers year to date that have been acquiring nurseries. Unsurprisingly, we have seen quite a shift in terms of the number of first-time buyers or newer entrants to the sector. This time last year, we saw 33% of our transactions being from first-time buyers and smaller groups. This year, it's diminished to 16%. a lot of that will be around the cost of capital increasing, and obviously first-time buyers particularly have less experience. So there are some greater challenges in that respect. But there's been a very positive movement in terms of a 9% growth in the number of smaller regional groups that have between 3 and 20 settings that have been very acquisitive this year. So that's been a slight shift in the type of buyer, but there are still plenty of buyers active and keen to acquire across nationwide, ultimately across the whole of the UK. As I mentioned as well here, look, we can see that the average size of nursery sold has been shifting year on year. Now, ultimately, some of this in terms of the shift to the average will be because we've had less first-time buyers in the market this year who would ordinarily be buying slightly smaller nurseries. But that sort of size of average nursery, it's moved to 78 places from 69. So obviously the larger the setting and the right location, the greater headroom there is to be able to service those increasing operational costs that we've seen from the cost of living crisis and utility costs and so forth. So they're just a few of the key data points that we wanted to share with you. We have had nationwide activity, and there's a lot of regional nationwide data in our report, but Nick's now just going to touch on a number of key transactions and just highlight transactions so you can have a flavour of the projects we've been involved in year to date. So I shall hand over to Nick as he talks you through some of this activity.
Great, thanks so much, Courtney. I think what we wanted to try and do today is just show you all that actually the activity isn't centred around one particular part of the country. One of the things that we have been seeing over the last 12 months is actually the demand for settings right across the UK and further afield has just increased. So on the next few slides, what I'm going to try and do is just point out a couple of deals that we've done, but again, just show where buyers are beginning to look, and we're not completely centred around London and the South East all the time. The year got off to a fantastic start for us with the sale of Pippa Poppins Nursery Group, which was a super premium group in central London. That was part of a highly confidential process and ended up being sold to Duke's Education, which fitted in perfectly with their model they're looking to grow in central London and complement the schools they've got around the UK and further afield into Europe. So as you'd expect, the starting point, it all seems to start in London, but then we began to see some other transactions across different parts of the country. And it was great to see iStep Learning begin to grow quite rapidly and been involved in a number of our transactions. And they bought a nice little group of 3 over in Devon. You know, it's not lost on us that some of the further afield parts of the country are harder sometimes to sell, some nurseries. But what we are seeing is people buy groups, then infill back to where potentially they've got their stronghold main head office holding. So a lovely little transaction of 3 nurseries that will help iStep continue to grow. Next slide, please. Thank you very much. I just wanted to show that here that the Store bought a fantastic unit over in Suffolk, and the reason we mention this is that as areas get dominated by nursery operators, and let's say London has, it becomes harder to find quality units and the competition is harder. We are definitely seeing a move towards places like Norfolk and Suffolk, where there's huge opportunity to consolidate and to add on to, you know, nurseries from where they already have a strong foothold. And this is a prime example of that. This is a very profitable 142 place setting that Store will have acquired, and I'm sure will be a most impressive addition to their group. The next slide we've got here is for Katie's Nurseries. The reason I put this on, we do flip back into London, but I just also wanted to show that there are new entrants coming into the market and making strong acquisitions. You know, it isn't all about the top 2 or 3 that they're buying everything. We're seeing a complete range over. Some of the top 20 main operators are all in for the deals that we're able to offer. And Chalk Nursery Group came in and have acquired this group of It's actually 5 settings. I know we've got 6 photos before anyone writes in, but it does square it up nicely. But it is a fantastic little group, and just slightly against the grain that, we talked about the rise in capacities that people are looking at. This group wasn't all 100 places, and it was a complete mixture. But obviously, one of the key factors there is just the locations and the affluency that these settings had to offer in this group. And again, someone retiring from the setting, from the sector, and was able to help them do that. Next slide, Courtney, please. Just another group, and again, we're flipping around the country, but the next group was Barnkids Nursery Group that we sold. Again, Surrey and Hampshire, one of the larger operators, Bright Stars, acquired this group before. Super addition for them. Again, another popular part of the country for acquisitions. And again, someone that had started organic growth, added nursery after nursery after nursery, and then had decided on their exit strategy, and we'd helped them bring that to fruition, really. But again, a nice super group. And I think on the next slide, what I just wanted to show that there is activity in the centre of the country as well. We can all see that Kids Planet have been super active right across the country, but I think that central belt has become very popular indeed. And once again, we helped the owner of Kingfisher Nursery Group. We actually helped her to grow, and now we've helped her to exit. So, as a super process to follow our way through. But here in particular, there was 3 fantastic settings that Kids Planet acquired. I think one of the questions I do get asked is it's not all about the huge transactions. And I think Courtney mentioned it we have seen a fair amount of first-time buyer activity, and we have helped quite a number of people, start on the ladder in the childcare sector. There's some pictures here for you to peruse, but I think the demand is there, and we're seeing that right across where people are looking to enter the sector. And it might not be a hugely profitable setting, or it might not be a massive setting, but what it has got, it's got the scope and the potential to people to ease themselves in and then to use as a platform to build on. The people that we are seeing coming into the sector are generally, there's a myriad of people, but we are seeing a lot of people from other professional sectors. It might be doctors, it might be dentists, and they can see the relevance of a well-regulated sector that they can come into and, and can build, basically. I think it's also fair to note that there are a number of franchise opportunities out there that have also grown pretty quickly, and that also gives first-time buyers the chance to enter the sector with more support. So we have seen quite a number of those right across the country. So I think that just sort of culminates, and I think the message is that from our point of view, we are seeing that activity right across the country. But I think people then ask, where do we see all this going? We have seen an uptick in inquiries. We're always pretty busy anyway, but obviously I think buyers and sellers are super hungry for information, and hence why we do these webinars. But I think just to know how they plan, and I think with all the deals that we do, have a great plan in place will help them with their exit strategies and help them achieve a premium price. Courtney did mention we have seen a slight lift in the size of settings that we're selling, but I think that is relevant to the location. A smaller setting in a super affluent location is also very popular. I think gone are the days when we see lots of 150, 200 place settings coming to the market, but I think that sort of 60 to 100 place setting is a pretty good average of what we see and what's in demand. I think just from a market perspective, we're pretty confident that we're going to see everything just continue in the same vein. And, we're in a really good place anyway. From anyone that has sold over the last little while, that, they've got a decent price for their business. And just because of how sought after nurseries are, we see that continuing. The groups are continuing to buy. And then there are also some of them are consolidating their own portfolios, which also gives the opportunity to see some first-time buyers buy smaller settings. So we've got a complete range that's happening right across the country. But I think as we stand today, subject to some of the things that some of the other people might say in the webinar, we're pretty confident that 2014 and beyond is going to be super positive.
That's great, lovely. Thank you so much, Nick. So as you can see, very busy and very positive outlook to our half-year point. We remain positive for the remainder of the year. But clearly, we have had a very significant and quite monumental event in the interim. On the 4th of July, we saw the landslide Labour election, Labour winning the election. So we're delighted now to be joined by Purnima, because obviously this is a very significant change for the country and especially the early years sector. So I have to say, over the course of the past 12 months, I have not, in my 25-year plus career, seen early years, day nurseries and early education and our workforce feature as significantly in the press and the national headlines and conversations on the BBC Breakfast Sofa as I've seen in that 12-month window. And obviously, we're all very much hoping that a new Labour government will continue to discuss and collaborate and converse with providers. But Purnima, I know Purnima's had an incredibly busy sort of 7 days now or so. So we're delighted that you can join us, Purnima, to share your insights post-election and share your thoughts around policy and what you're expecting to see from policymakers, the new minister and DfE going forward. So welcome, Purnima.
Thank you, Courtney. Good afternoon, everybody. And yes, absolutely. The scale and the pace of change is phenomenal. And I'll just go on to explain in terms of where we are and what's happening. But as you know, NDNA launched the manifesto, made the first 5 years count. And you can see there's a link on this slide. And we set up a manifesto toolkit for all our members and everybody else, even non-members, who could actually access this. But most importantly, if you see this map, what we've managed to do is actually make it interactive. And so if you press a constituency or a local authority, you will get all the data in terms of number of nurseries, in terms of hourly rates, closures, all sorts of information. But most importantly, what we did is 2,300 candidates who were standing for election from all parties. So we mapped all that on this and we actually wrote to all those people. And of course, now we will be updating this map with the new MPs. And so if I can move on to the next slide, please. So I think what is really important is these are just really headlines from our policy priorities. I'm not going to read out, but there's a lot more detail in terms of these bullet points here. I think what we haven't really heard much in the election kind of campaigning and all the manifestos from different parties is about children, putting children at the heart of everything, and also on early education and childcare. We didn't really hear much from anybody apart from some headlines. And so really what we're talking about is the funding and how, early education, high quality early education and childcare can support children, not only in their development, but also supports parents and of course contributes to the economy. And regulation, of course, regulation is important, but also having kind of, really important areas, especially with all the kind of issues that, we face through Ofsted inspections. What is important is to a complete review of Ofsted, but most importantly, regulation that is actually really specific and really helps and supports that quality improvement rather than actually becomes a threat to providers. So in terms of the election results, I'm sure you all know this and you've seen this. You can see the scale of change. And I think, this is something that we cannot really underestimate. So we have now got a majority, Labour have got a majority of 174 seats. And you might see slightly different numbers out there somewhere, because sometimes, the people who've been either not been standing or cancelled or withdrawn, and also the Leader of the House of Commons and the Deputy Leader won't be included in these kind of majority seats. But you can see big increase also. Lib Dems, 64 seats. And I think that in itself is phenomenal in terms of the change. And the next slide, if I can just look through, we now know the kind of the scale of the swing in the election. What it means is the number of new MPs. And if you look at that number, of the 650 MPs, 335 of them are brand new. When I say brand new, they are new to politics. They may have been party members, they may have worked within the local government or different sectors, but they are actually new to becoming an MP. And of course, out of that, 211 are new Labour MPs and 63 new Lib Dem MPs. And of course, there are other small parties and independents which have grown as well. But I think what I really want to really stress is the importance of not only educating these new MPs, but also raising awareness in terms of early education and childcare, because don't forget, they will have a number of other priorities like all the ministers will have. One of the things I was kind of, when I was watching news, Chris Mason from BBC was in the House of Commons because, after the election, the candidates will be given an envelope, and of course they open that envelope when they go into Parliament and they've been sworn in. And Chris Mason explained this kind of, it's like, he said the comparison is a kind of a democratic version of the Freshers' Week, because all these MPs are, new, bright-eyed and wandering around and absolutely dazed in terms of, the scale of what they have to do. And I think that is something, of course, we will be taking them to task, and we will be challenging them, and we will be holding them to account at a national level. But what is most important is at a local level, providers will have to engage with all of these new MPs. You must make sure that you invite them to your nurseries and talk to them, explain to them in terms of what the challenges are locally, because as you know, the local authority variation can be very, very different. And of course, that's where our interactive map comes in. You can have that local MPs contact. We are now updating those contacts, and you can actually use that information. But I think, most important thing is, we've now seen the ministerial appointments were made very, very quickly. And of course, we've got Bridget Phillipson, who's now the Secretary of State for Education, who was the Shadow Secretary before, and no surprise, Stephen Morgan was appointed as the Minister for Early Education, and which is really interesting because one of our manifesto asks was to change the terminology and to start talking about early education and childcare, not just childcare. And I'm pleased to say his new title is Minister for Early Education. And he was only appointed yesterday. He was tweeting yesterday, confirmed in the afternoon. And I had a phone call to say the minister would like to speak to you. Are you available at 5:30? So I had a first meeting with him yesterday evening. And he is not new to politics because he was the leader of Portsmouth City Council, Labour leader, and he was also shadow minister in the kind of communities and local government before. So he's not entirely new to politics in that sense. When he asked me, Purnima, what are the challenges? And I said to him, you will hear the same thing from everybody you speak to. And I think we'll arrange you some visits to go and visit some nurseries. And of course, funding, workforce, and regulation, is no surprise to anybody. And of course, one of the issues is the Labour manifesto. These are the highlights that came out. These are really kind of, headline, main areas, but no level of detail underneath that has come out yet. One, of course, is the Labour have committed to continuing with the expansion. That is not only the September expansion, but moving forward as well. I'm committed to the existing funding, but they did say before that they might do things differently. Now, what that difference means is something obviously we're still waiting for. And of course, the other announcement that they made is they want to create 3,300 more nurseries in Waken primary schools, creating about 100,000 places. And of course, what I said is that, just having a couple of classrooms in a school doesn't mean that a nursery can be set up that easily. And of course, from the sector point of view, the concern is duplication, sustainability, and of course, staff. People are worried that they may be their staff may be poached into some of these settings. So these are the things we've highlighted already by saying any of these changes must be consulted with the sector, and duplication shouldn't happen. And of course, wherever possible, the PBI sector should be delivering that kind of service within schools. And of course, David Bell has been appointed to carry out the review. Again, we haven't seen any of the detail of the review. So of course, we're hoping that will come out shortly. And again, 500,000 children, more children hitting early learning goals by 2030 as another manifesto announcement. And of course, improve quality of maths teaching and communication as well in nurseries and primary schools. So these are the kind of things, but there are other policy areas. You can see parental leave, and of course, national minimum wage to reflect living costs. And of course, what we want to see is national minimum wage and living wage increases to reflect the hourly rates as well in terms of local authorities, what funding is given. And they did say reform of Ofsted, including one-word judgments, but this one-word judgments is they're only talking about schools. We did ask about what is going to happen for early years. Again, that's going to come out as well. And if I can just go back to this slide, a couple of slides before, please, Courtney. In terms of what we're doing, I've already explained in terms of the manifesto pledges, but most importantly, what we are currently doing is we have put an FOI, the Freedom of Information request, to all local authorities, because what our members have told us is the capital funding announced by the previous government, they haven't been able to access any of it. Local authorities haven't really come out and said that, yeah, here is the application process, you can apply for it. Only a handful of local authorities we've heard from. So we put a Freedom of Information request in terms of, what capital funding they were allocated, how much of that is being allocated to any of the PDI nurseries, and most importantly, what are they planning to do if they haven't done that already? So we have got a lot of information already, responses are coming through, so we will be publishing that information shortly. And of course, tonight there is a parliamentary event. Bridget Phillipson and the new ministerial team are meeting with us, and I'm hoping to go there as well. But our dialogue will continue. But really, my advice to our members and to providers across is to make sure they contact their local MPs, they make sure that they are engaged in these debates, because like I said, the raising awareness to the new class of 2024 is going to take an awful long time. Thank you very much.
Lovely. Thank you. Thank you so much, Purnima. Some really helpful insights there. Now, I'm sure there are going to be lots of questions from delegates arising. So I encourage everyone and remind everyone to please ask your questions via the Q&A function. And we're going to have a Q&A session at the end of these presentations. So I'm sure that Purnima can then expand on a number of areas that she's mentioned in her updates and in her presentation. So I now have pleasure in introducing Ben, and Ben is going to be sharing his insights from a fiscal perspective in terms of the impact of the change in government. So welcome, Ben, and I'll hand over to you.
Excellent. Thanks, Courtney. Excellent. Thanks, everyone. So, as I said, my name's Ben Powell, partner at Ballards LLP. I think we've been watching carefully with obviously everything that's going on from a wider economic point of view, and then sort of thinking about how that affects our childcare clients. If we go to the next slide, please, Courtney. I think generally the economy is obviously on the turn, we hope. So things are looking a bit more stable going forwards after some pretty unusual things that have happened behind us. Obviously, interest rates starting to fall, hopefully, surely. Inflation looks to have sort of got under control. And I think with a Labour government coming in with a huge majority, I think regardless of sort of your colours, which side of the political argument you are, generally businesses, I think, are sort of looking for this dullness dividend that's sort of been described, where just a period of stability, a period of not a lot of huge changes, hopefully, in front of us. Businesses love that. And hopefully that's the plan for the next few years, which hopefully makes the, if businesses win, then hopefully all sectors win. I guess, sorry, just going back to that slide, Courtney. I think Labour have sort of come out that there's two schools of thought. Obviously, one is that we borrow big, we invest in lots of things to try and drive growth. I think Labour's fiscal rules, which are on the screen there, have essentially said that we're not going to do that. We're going to try and stick to some fairly sensible fiscal rules, and then at the same time that they've made some pretty big commitments that they're not going to increase national insurance, income tax, or VAT in this parliament. They make up 57% of all of our tax revenues here in the UK. And then they've also committed to keeping, or at least capping, corporation tax. They're not ruling out that it might go down, because obviously corporation tax is at a high compared to previous years, but not to increase that above 25%. And to retain sort of our full expensing, so help with investing in capital expenditure. And I think by the time you add corporation tax in, that's sort of basically tying Labour's hands on 67% of our sort of taxable revenue. And what that really means is that anything else Labour might want to do tax-wise to try and raise money, it is based on all of the other taxes, and so you can imagine every other tax you could think of, from capital gains, inheritance tax, stamp duty, down to more weird and wonderful windfall taxes, fuel duties, alcohol duties, etc. Everything else that makes up only 33%, and that's kind of what Labour have left some of that open to be able to hopefully raise some funds on their side. So next slide, please, Courtney. So what have they said will change? Well, here that sort of the manifesto commitments, obviously the big one, which Purnima has mentioned already, is opening an additional 3,000 nurseries, which the details of how they're going to do that beyond looking for space in primary schools is light. One of the big things that they're trying to do to raise the money for that is to close the VAT loophole on private school fees. I think obviously as people who operate in the nursery sector, I suppose you question how much of a loophole that really is. Clearly, by being able to then charge VAT, they're going to have to put prices up. Okay, they'll be able to claim VAT back on expenditure, but generally speaking, most childcare settings, schools, etc., would have very little VAT expenditure, maybe other than capital, or possibly if the building is rented. So that's generally seen as clearly as a negative thing for private school, although there's no sort of suggestion that's going to move into our sector in child nurseries at the moment. Private equity funds are going to be taxed as income rather than as capital gains. Well, that does have some fairly significant impact potentially. It's obviously PE funds that sit behind a lot of the big players, the big corporates in the nursery world. So what does that mean? Does that mean that they may have less money to invest in the future? Does it mean they might enter a period of sort of building rather than divesting, because they know if they divest, they're going to have to pay more tax on those divestments? So it's really difficult to know what impact that will have. It's clearly a popular one to the electorate, but actually in practice might have some real impact in smaller sectors. And then I suppose something that I'm sure most people will be looking forward to is a reform and a replacement of the business rate system, although really we don't know what that actually looks like, other than there's a lot about it benefiting small businesses, and potentially whether that stretches to nurseries. We would hope so, and therefore whether the idea is to get your big warehouses and the likes of Amazon and people like that paying more money towards rates to try and level up the playing field. So potentially that's good news. And also that the creation of a national wealth fund, which I think it sounds like a good idea. I think the only thing to say about that is there's going to be very little impact on this sector. I mean, that's very much around sort of specific areas, gigafactories, green energy, steel projects, etc. So we're probably unlikely to see any benefit from that in the childcare sector. Next slide, please, Courtney. I suppose what that therefore means is what might change. Well, who really knows? Keir Starmer was quoted as saying, that the manifesto is fully funded, fully costed, and so there's no need for tax rises right now. Although clearly, whether there will be tax rises or not, I think that the general consensus seems to be that we expect changes in the budget. The obvious things that are left open to change, which the Labour Party haven't really made any commitments on, is obviously capital gains tax, which is clearly a crucial tax for anybody looking at selling, either now or in the future, selling a childcare business. There's an argument to say, we've had a lot of hits on that already. That there used to be very favourable treatment, entrepreneurs relief, now called business asset disposal relief, which you may be aware of. Under certain circumstances, you can sell businesses and pay 10% tax on the gain that you make. That has been sort of chipped away every year. We've now got £1 million lifetime allowance for that. So the first £1 million in your lifetime, you could claim that business asset disposal relief on. Other than that, you're up to currently 20% capital gains tax. There's an argument to say, well, will that go? Who knows? It does hopefully encourage small businesses and innovation. So, it doesn't necessarily have a target on its back, but there is a general consensus, perhaps, that capital gains tax more widely will be reformed. And there's obviously been comments in the past around, should capital gains tax move to the same rates as income tax? There's nothing to say that that's definitely going to happen. We don't have a crystal ball, but certainly I know a lot of our clients are making moves to trigger capital gains if possible, whether that's sell, whether that's have a management buyout, whether that's doing succession planning, to try and make sure that happens before potentially the next budget, which I'll come on to on the next slide. So I suppose uncertainty there. And the other point is inheritance tax. Currently sort of trading businesses, which generally speaking, nursery settings would come under, are sort of free of inheritance tax, or technically they get 100% business property relief, so that they kind of effectively fall out of your estate if anything happens to you. There's obviously a lot of talk around whether that will be changed, whether that relief will be reduced or even removed. I know that would be a big change. The Tories there was a lot of sort of speculation before the last budget that inheritance tax would actually be abolished altogether, because it's very complicated. It doesn't actually raise that much money. It keeps people like me and other people in jobs, but actually, does it do a lot for the country? Potentially not. But politically, I think it would be an easy one for Labour to target, because it's at least, the optics are it's seen as a tax on wealthier people. Next slide, please, Courtney. I think that the key question that I do get asked is when will all of this change? Well, there was talk around could there be an emergency budget? Obviously, Labour have got into government and made several sort of pretty big announcements straight away. I think the only thing is the Chancellor Rachel Reeves has said she would sort of commit to waiting for forecasts to be able to make that budget. And those forecasts take 10 weeks for the Office of Budget Responsibility to pull together, and therefore I think the budget is unlikely to be, well, it's unlikely to be before September at least. I know the slide says October. I think there's a potential that it could be late September. We're then into party conference season, so October, would they clash it with the party conferences? Possibly not. And so there's some speculation. I'm sure there's some bookies bets going in as to when it will be, but potentially as late as November. I can't imagine it being any later than that. So presumably sometime between September and November, we expect a budget. It is possible for the government to make instant changes on certain things. They don't have to wait for a budget. There are different legal mechanisms to allow them to do that. And they can even potentially sort of put anti-forestalling provisions in. So if they announce something, that they can basically say, it's effective from now. Will that happen? Who knows? We haven't seen any evidence that it's about to happen. So possibly we are waiting for that budget in the autumn. But I guess we'll see. So next slide, please, Courtney. Excellent. Well, that was sort of what I had to say. I think we're moving back to sort of Q&A and panel session now, aren't we? So I'll hand you back to Courtney. Thanks, everyone.
That's fabulous. Thank you so much, Ben, for those insights. Really helpful, and I'm sure gives lots of the audience much to think about. So let me see if we have all our panelists with us now. So very helpful. Thank you all for your insights. And again, encourage the audience to please ask questions via the Q&A function. I think what I'd like to start with is just picking up on the comment that you made, Purnima,
Yes.
in terms of, you mentioned in your presentation that, and I know we've had quite a few questions in advance around Labour committing to the 30-hour policy and the extended early years entitlement as announced by the Conservative government. But you said that Labour might do things differently. So if I was to put you on the spot, what are the suspicions? I know there's very little detail at the moment, but how might they do things differently?
I think one of the things that Bridget Phillipson said, even before when she was a shadow Secretary of State, was that this is something that we pressed her at the Labour Party conference last autumn, because obviously the previous government plans go into 2025 in terms of the expansion. And one of the questions I asked her when she was kind of at our event at the party conference is that, are Labour committed to the expansion? And of course, the funding that goes with it, if you're elected, after the election. And she did say that they will commit to the expansion plan, but they might do things differently. And that's how different, I think the only one area we've heard about is that expansion through schools. And of course, as you know, even before the elections, DfE have got a pilot project located, who were actually delivering this pilot, about setting up provision in primary schools. So that project will continue because it's still ongoing. And I think that will become part of the policy in terms of developing new places. And of course, one of the things that they were very clear is that there are childcare, deserts in England, and that's where the focus will be, meaning that where providers have got long waiting lists or there is no provision around is where the focus is going to be. But I think, what we need to make sure is we know in terms of local authorities and their sufficiency assessments, that's another freedom of information request that we put in. I think unless there are robust sufficiency assessment to really highlight exactly where those childcare deserts are, what we don't want is any duplication that threaten the sustainability of existing high quality provision. I think that's something that we are very clear about. The other thing they also talked about is we will kind of continue with the expansion plan. We might do things differently, but there may be conditions on the funding. Now, what conditions there are, again, we can speculate. Could it be in terms of the profit that providers can make, or could it be that they'll have to take a certain number of children with special education needs, in order to classify for funding? So there are several things that could be put into as part of that conditions. But I think one of the things that they were looking at, not the party, but a lot of commentary was going on about the Irish model. And we know, talking to the Irish civil servants and also some providers, the kind of what is happening in Ireland is also, there has been a lot of kind of, debate and discussion, and it's not really a perfect model either. So I think what we want to make sure is we want to know more about how the expansion is going to be rolled out, what do they mean by conditionality, and of course, what happens in terms of the school provision. And one thing is that, from a civil servant's point of view, this is a huge change for them. So they have to grapple with all the changes in terms of the new government and new policy. But the early indications are, because the letter Bridget wrote to the sector, put early years first, And remember how much we've been banging on about it since COVID. You know, it's not just schools. What about early years? What about early years? But I think, you know, it seems to be that the message is going through in terms of how important early education is. And it has been, you know, in terms of the media throughout the election, but also way before that as well. I think, you know, there are some positive signs, but we'll have to wait and see.
That's really insightful and helpful, Purnima. It's really interesting because I know it's a real concern for providers in terms of, you know, what the future looks like. And also you mentioned there conditionality, potentially around, well, a number of points there. You mentioned profiteering, and quite rightly, Bridget Phillipson has been very vocal about profiteering in the children's social care sector. And I've heard her reference profiteering in the nursery sector. But equally, when you reference their conditionality around SEND, as we know, nursery operators across the country, they've seen such a surge in children that have additional needs. And they're willing to support and help those children, but extra funding is required. Do you think that we might be able to have some visibility around forward-looking funding? I mean, I know sort of Ben mentioned earlier about, you know, the sort of the potentially that sort of the more stable interest rate environment and stabilized inflation. And as a nation, for our economy and for our providers, we need to have visibility of, you know, income ultimately to make informed decisions about our provision. Do you think that DfE under Labour will share insights around the funding formulas? Might they be linked to inflation? Are we likely to receive more sort of a more collaborative and open approach to how the funding is sort of structured on a year-by-year basis, so providers can plan and adapt accordingly?
Yes, I think, you know, simplifying funding has been mentioned because this is something that we've been pushing for a number of years. But also, it's not just specifically about early years funding, but also a 3-year funding package for local authority has been mentioned in various discussions, not specifically on early years. But there are pros and cons with that because, you know, in Scotland, as you know, local authorities get like a 3-year funding. But in fact, what happened is that the funding rate hasn't gone up at all, even though the government said, well, actually, we have included the cost of living increases as part of that funding and passing the buck on to local authorities. And of course, local authorities say, we haven't got enough funding to deliver that. So there are pros and cons. And yes, if the 3-year funding kind of, you know, package will give that kind of a reassurance. But equally, if it's not index linked and if it's not linked with any of the increases business costs, that isn't going to help either. So I think there are, all these are kind of things that, you know, we have been kind of having discussions in the background, not just with the policymakers, but also, most importantly, I think what is really important, that's why we do all these FOIs to local authorities, is really getting that evidence from local authorities. We've got the funding rate evidence, we've got the underspent evidence. It's phenomenal that £70 million of earliest funding hasn't been spent on early years. This is our last FOI, which we published a couple of months ago, highest ever in terms of the research we've been doing. And I think 6 local authorities had over £1 million. Essex is the largest underspend in England in terms of earliest funding. So how can we justify that at a time when providers are struggling and not being able to kind of, you know, remain sustainable? And yet, earliest funding that's been allocated by government to local authorities has actually not been spent. And so over the period of our investigation, we now know that £300 million of earliest funding that's been allocated specifically for early education has not been spent on early years. So that in itself shows the flaws in the funding system. And that's why we're asking for a complete review and reform of how that funding is allocated. And of course, we already proposed a model. We've done some modeling behind the scenes to actually make sure that funding goes directly to providers, but parents have a choice in terms of where they want their children to go.
Mm-hmm. No, I completely agree. If there are significant flaws to the funding mechanisms, and funding is absolutely key, given the proportion of places that local authorities government will be purchasing for parents. And that key element of funding very much links into a number of the questions and concerns we've had raised from operators ahead of this webinar starting around that transition, the proposal by Labour to transition the living wage through to a minimum wage and have that sort of erosion of the age splits. I'm sure I've never heard any of my clients say that they would not want to pay their staff more. We know that as a workforce, there are real challenges that we have to overcome. And obviously, we want to pay our staff more. We want to compensate them for the contribution that they make and retain and attract and upskill our workforce. But obviously, we have lots of providers have a concern over wage levels now. I know NDNA research has shown providers, their wage bill could account to 70% of their revenues. Nick, do you want to pick up on some of those challenges? Obviously, when in terms of the markets, when we are advising clients, wages are a very significant element, aren't they, ultimately? And I know we see massive variations around those wage bills because operators will be concerned. How can they, pay their staff more while trying to control every other overhead? And I put this to you because also I'm very mindful that, as a sort of a PVI sector, we actually do offer a very sort of a service which is far more sustainable than that has been offered by local authorities and governments before. We only have to look at the rollout of Sure Start, the rollout of neighbourhood nurseries, the rollout of children's centres. Great, well-intended schemes, but so many settings closed because the local authorities, they couldn't afford to run those settings. I know that we are currently selling a number of nurseries on behalf of local authorities that actually are incurring very significant losses because of the wage bills and the type of operations those local authorities run. They're not as commercial and therefore sustainable as the private sector. Your thoughts, Nick, if you're able to share around workforce and wages and how that might impact providers going forward.
That was a cracking question.
I can ask you the question about multiples if you prefer that one.
No, it's fine. I think your point is relevant, isn't it? Is that we see a complete a spectrum of that, really. So where we see people that are trading at their wage levels and just in terms of income, it can be sort of 40%, which is unknown to some people. But I think the vast majority are up at the 60s and 70% of their income. And I don't think actually that the world out there realises that the income that's coming into a nursery before they even get going, that sort of percentage is out the door. They often see owners, they must be making absolute fortunes here because they've got loads and loads of children coming in and out every day. But actually just being able to manage those settings and economies of scale can help. But I think the problem of that and the cost of that cost base for staff, everyone's got that problem. No one is immune to that, from your biggest operators right across the country to your smallest operators. I think then on top of that, we've gone through a stage of, because the better qualified and the better staff that people want to try and lure to their settings, they've started offering them all sorts of different things to do that. So that they're getting dragged from places they've probably worked at for 10 years. There's a multitude of offers out there because people are obviously scrabbling for a certain size pool of people. And this is what we don't want to see, we don't want to see the emergence of a load of new nurseries across the country where all the staff get diverted across and take a view, I could go and work there, it would be great. And what happens, let's be honest, it probably doesn't work and they end up going back. But the pain that they've caused for owners in the meantime is very, very difficult to swallow. And as I say, it's obviously one of the biggest things that we look at. If someone's coming to the market and we look at their wage levels and they're particularly low, we need to know why, because actually the vast majority have got that same problem and they've got to be at a certain level to be able to, not just to meet ratios, but actually, there's people not turning up certain days and illness and all those sorts of things. And, it's an ongoing story. But it's something that, as I say, I reiterate that no one's immune to. And that, joined with recruitment, are the two main factors that is on everybody's lips all of the time.
But no, I quite agree, Nick. And as you say, I mean, I was speaking to somebody yesterday actually who was talking about what the next few years might hold in terms of, this sort of provision created in schools. And then ultimately, that flow of staff into staff, that provision in schools, and then what happens in 3 years' time. They were talking about, how much more pain is ahead. And as we discussed this with him, that person, I said, look, as a sector, we're always going through pain. In all the years, we've always had some challenge, haven't we, that we've had to overcome. But I agree with Purnima that the duplication or non-duplication of services is absolutely key. It's really interesting in terms of Ben referenced the changes to the end of tax breaks for independent schools. And obviously that's, I understand, will be taking effect from September next year. And while there's this, programme and the pilot by Located to identify vacant classrooms in schools, you have to ask, are those vacant classrooms fit for purpose in terms of providing early education, in terms of the physical actual building? What is it? Is it a classroom in a school? The cost of converting those, and equally, by that time, how many parents whose children are privately educated actually, choose to change the direction of their school's child education? So it'll be an interesting sort of aspect to watch as we move forward.
Just one point to bring up there, actually, Courtney, if I can interrupt there. In terms of school-based provision, but I think one of the things that what we're saying is it has to be age appropriate. From September, 9 months old will be eligible for the new offer. And would parents want 9 months olds in a school-based setting? And is that really appropriate for a very young child? But most importantly, I think £40,000 to set up a nursery in a primary school has been mentioned as a figure. And I'm sure that is only for some capital expenditure to furnish it. But staffing is going to be a major issue. That's where providers are really worried that they're going to be able to poach our staff who are well-trained, qualified. That's what will happen. And of course, unfortunately, this has happened in Scotland, which is something that we want. And a majority of the providers lost their staff to maintain sector provision. And in fact, quite a lot of them have actually come back to the sector again, because sometimes the grass is not always greener on the other side. But having said that, when people are struggling with cost of living increases, better pay and better conditions from the public sector contract are always going to be, preferable for some people. But I think the most important thing is about the parental choice and the flexibility that the PBI sector can offer to parents. It's not just term time only. That's what the school-based provision will be, 9 till 3 and term time only. That's not what most parents want. And if you want to grow the economy, if you want parents to get back into work, they want flexible, sustainable, high-quality childcare, not just a quick fix. And I think that's something that we really have to bang on that message.
No, that's great. Well, thank you, Purnima. I'm just going to now move to go to some of the questions that we've received during the session and some questions received before. So I'm going to start with, let me have a look here. Should we start with, right, let me start with a question for Nick. Nick, we said how long would it take, but here's the question for you. So what are the market trends around multiples for valuations, and which variables are having an impact positively or negatively on those?
I think where we're at is in terms of it's interesting from leading off the back of this conversation, that we're obviously still pretty busy on selling nurseries. So whilst it's got its challenges, they are actually super sought after of all sizes. So we're seeing the multipliers that are used in the market, or multiplier of profit across the board, are at levels that actually this industry has never really seen. I've been doing this quite a long time. So I remember when, we was at 2s and 3s and 5s and 6s for freeholds. Now, in some instances, we're still well above that. There is an argument that the market has slightly reset, and no one would be immune to seeing that, the cost of borrowing has gone up and interest rates and inflation and all those sorts of things. So But I still say to anybody, you know, that was contemplating looking at where we were and where we are now, if we stayed as static now for 2 years, we'd still be in an absolutely super place. So I think anyone that's thinking about, sure, I'll go back to the word resilient. You know, whatever's chalked at this sector, from our perspective, is that there's not the sort of money that's coming in and people being acquired because they think this is a short-term hit and they're going to get out. It's a long-term play. And actually, I think that would be my message to people, that, you know, that your value is generally, yes, you have the odd blip, but I think we're seeing the values drive forward. And that's only because of the great job that people are doing. People don't buy people for the sake of it. They buy it because they're doing a good job and they're buying a growing concern that's doing very, very well. So it is a positive message, but I do appreciate from what Purnima was saying, you know, there are challenges. But once again, whatever seems to be chucked at this sector, it seems to take it on board and keep running with it.
All right, thank you, Nick. Purnima, I've got a question here that I'm going to put to yourself. So this is a question from Philip Siddle. So for practical purposes, the generally accepted 20% private element of revenue simply cannot materialise for providers if eligible parents are unable to take up places for which the majority of the stretched offer includes an element of private provision. Put simply, private income is entirely dependent on the availability of funding going forward under the extended entitlement. Any comments, regulatory issues, or local authorities changing rules? So quite a number of elements raised there, Purnima.
Yeah, absolutely. I think, you know, one of the things that what is absolutely clear is that any changes that the Labour will have to make in terms of how the funding should be distributed or any kind of things will have to go through a legislation changes. So that means there has to be a consultation process. So I think that's something that we obviously need to be clear about. When Bridget Phillipson, you know, she sent out a letter to the media today saying that she's going to deliver a sea change in the early years, and also in the earliest is going to be #1 priority. But I think one of the issues is 80% of the childcare places are now going to be government funded with the expansion. And so in a way, what the argument for us is, if that is the case, really, the government is the biggest purchaser of early education and childcare in this country, in which case, should they be paying VAT? Should they be paying business rates? You know, because it's seen as a kind of, you know, societal kind of, you know, responsibility and the priority on one hand, but on the other hand, even the Department of Education's own survey last year provided that actually many providers are not making any surpluses. In fact, some are struggling to break even. So I think, you know, taking into any profit elements into that equation for funding will be a non-starter, because if the government is actually going to be the biggest purchaser of early education and childcare, and on top of that, they want to put conditions because they are 80% purchase of childcare, that is something that we need to be kind of challenging in terms of the PBI engagement, because, you know, I went to an event recently, a union event, and the document that they put it in front of us was kind of, we see maintained nursery schools as the gold standard, and we see them as the jewel in the crown for early education. And I challenged them and I said, this is exactly the kind of language that divided the sectors during the children's centre stays. And I think what we should be looking at is what is best for children and what is absolutely crucial for parents, and how can we make sure we do that irrespective of what the sector is. But importantly, I think, you know, the government needs to really review in terms of who's offering what at the moment. And already, quality point of view, you know, more than 90% are good or outstanding from Ofsted, and using that existing provision rather than tinkering with the funding in such a way that it will be a kind of, you know, really negative for providers who want to come into the market or who even want to expand.
Thank you, Purnima. Now, and on that point there, in terms of, you mentioned at the end of that, providers that want to come into the market and to expand, I just want to link 3 questions in together, if I can, to Ben and to Nick. So I'm going to try and merge 3 questions as we're quickly running out of time, but I'm keen to answer as many of these as possible. So, Ben, you mentioned in your presentation inflation being largely under control, interest rates slowing down, and that we would agree with that. Having literally just published our report this morning, that's exactly what Nick and I say in our report. But I did read on page 2 of the FT this morning a slight nervousness around, could interest rates. There was nervousness around possible inflation, a nervousness around if there's enhancements in inflation, could that sort of further fuel interest rates again? I think yourself, Nick, and I all appreciate that, the market enjoys confidence. The markets do not like uncertainty. But you also referenced private equity funds being taxed as income rather than capital gains. So I want to just touch on private equity. And we've also had a question in from Umar, in terms of asking how far the market has consolidated already, and is there scope for further consolidation? So I'd like us to pull those streams together. Looking ahead, we'd like to see a stable economic environment. But what do we feel the landscape does look like for between now and year end amongst the private equity investors that are already in the nursery sector, and linking into that question into Nick in terms of how consolidated is the market? Is there scope still for further growth? So Ben, your thoughts first regarding inflation and interest rates and shifts there maybe.
Yeah, well, it's obviously very difficult. I think every time we get to thinking interest rates are about to fall, that there seems to be another sort of spanner in the works. So I think the underlying numbers, inflation is sort of where it should be as a global number now. But when you drill down into that, services inflation is certainly higher than it should be. I think that's still running at 5-6%, something like that. And I know the Bank of England are sort of very much watching that closely, with a concern on that, particularly being with us in the UK, mostly being a services economy, that's still an element of concern for them. So I think that the latest projections I saw was still not expecting any immediate interest rate reductions. It was probably pushing out towards the back end of the year. I think private equity is still active, though, that they're still very much, that they're still looking to make returns, far in excess of the cash you can get at the bank and the interest rates that they need to pay on borrowing the money. So I think that hasn't necessarily stopped. And in terms of consolidation, I think we're still some way away from having a fully consolidated market. I know, not wanting to compare vets with childcare, but certainly veterinary is a market where there's been huge consolidation, and actually that one is possibly a market where it has gone too far now, with the sort of the regulators getting involved and saying perhaps is it impacting on competition, and staffing is sort of a problem in that area. I think we've got some way to go when you compare the sort of how consolidated childcare is with still lots of single sites and small groups. That there's still a long way to go on consolidation, in my opinion, but Nick might have some more insight on that.
Completely agree, Ben, to be honest. We use the word fragmented, and whilst we've seen a lot of consolidation, there's still plenty of opportunities out there for anyone looking to consolidate what they've got, grow. We're seeing people now, as I said from my presentation, look in areas that they probably hadn't looked into before. I think that's also partly driven by what happened with COVID. Every nursery needed to be by a tube station or by this or by that. That basically changed, didn't it? And we'd have areas where I think some providers would have looked at some of their nurseries and thought, this is a bit of an outlier. It's, there's not that many chimney pots around it. And lo and behold, we have quite a movement of the population, and suddenly those nurseries have come pretty full. Because obviously the work patterns have changed. Not everybody's in an office, 6 days a week. So that's changed the outlook on a lot of things. But I think, no, in short, the answer is there's still plenty for everybody to go at. And just think about it. The biggest providers in this country have got 300 settings, and that the top two, then you're down another 100, and then you come down out of the top 5 and they're at 50s and 60s. It's not massive in comparison to the amount of nurseries that we've got in this country. So we're nowhere near the sort of consolidation of the vet sort of side of things, and there's plenty more to go, really.
Absolutely plenty more to go, Nick. I'm incredibly conscious of time. So I think we're going to have to wrap things up for now. We do have a number of questions that are outstanding, but what we'll do is we will collect those questions, we'll respond to individuals personally, and we'll come back to you. We may well put together a blog, actually, because some very interesting questions posed. Clearly, from our perspective, from a Christie & Co perspective, you know, a lot of opportunity ahead. There are challenges, but equally, you know, as Nick said, we are a resilient sector, and, you know, we collectively strive to overcome, and we're here to support you as providers and support you as a sector in lobbying on your behalf alongside NDNA to overcome some of those challenges. There is going to be a QR code on this following page where you can download a copy of our latest reports. I really do hope that you found this session of interest. We genuinely appreciate you taking the time out of your busy day to join us. We hope that Purnima, Ben and Nick have answered, you know, and some of your questions and queries. We hope that you found our session of interest as well. Thank you very much to Ben, Purnima and Nick for your contributions. Clearly, we could have run on for at least another 30 minutes, if not an hour, on these very notable topics. But thank you for your time. Thank you, everyone, for joining us. And as we sort of move into the summer, we wish you all, hopefully, when the summer gets here, a nice summer break at some point. And as we say, we're here to help you going forward as and when required. We hope you found our report of interest. Any questions or queries arising, please do let us know. And hopefully we'll be here back with you with another webinar in the not too distant future. So thank you, panelists, and thank you everyone so much for joining us.
Thank you.
Thanks, everyone.
Thank you. Thank you.